In this video, we're going to be talking about some concerning Bitcoin signs. Now, it's always not the best to make videos like this where we have to talk about some bearish factors, and I know it's not the best to watch bearish content, so bear with me. I'm going to try and keep it as nuanced as I possibly can, and I want to show you, even though there are some bearish signs, why I'm still fully long in my Bitcoin positions, in my personal spot portfolio, personal derivatives portfolio, the show and the CryptoKid derivatives trading challenge, why I'm still keeping everything on a bullish side of things. But when I will start being bearish, there are a few parameters that if they are checked, unfortunately, we'll have to sort of prepare for a minor dump before a prolonged continuation. So if this video does sound interesting, make sure that you're subscribed and make sure you destroy the like button. On Monday nights, there's going to be something cool for me that's happening and hopefully cool for you as well. I'm going to get the chance of interviewing the legendary Benjamin Cohen once again here on this channel. We made an interview with him before and it was one of the most watched videos we've ever posted here. So if you have any questions that you would like to ask Benjamin Cohen, please go to the comment section down below and type whatever question that you would wish to ask Benjamin Cohen. Across the Telegram community and across the YouTube comment section, I'm going to be choosing one comment that I love the most, and I'm going to be shouting out your name and asking the question that you wish Benjamin Cohen answers, and I'm going to be asking that question to him and publish it either Monday nights or Tuesday. So subscribe, destroy the like button, and make sure that you comment the question. Okay, let's begin off with the most obvious warning sign or concerning sign. Today is November the 1st, meaning October, formerly known as Pumptober, is officially behind us. October closed not at negative 2.7%, because I tweeted this roughly about 7:51 p.m. my time, October the 31st. October ends at 12 a.m. midnight. And it did end at 12 a.m. midnight, just like every single day. And you closed at a negative 3.7%. So in that 4-hour sort of window, Bitcoin decided to drop another 1%, and we closed Uptober, Pumptober, Up-Only-tober at a negative 3.69% drawdown. This is actually not so nice. The average increase that we see on October is 19.92%, and it is historically the second most profitable month for Bitcoin. And actually, October, if we disregard this most recent data, it is the only month out of all the months since Bitcoin's inception to have had only 2 red months. So it's crazy. Like, October statistically should be green, but we went against that. And normally, people are worried because at the point of the cycle, we should be approaching a top Q4 of post-halving year. That's exactly where we are. At the Bitcoin cycle comparison website, if I bring it up, if you look at the price from bottom of the cycle, or the bottom nominal price of the cycle to where we are currently, and compare it to the prior cycles, excluding the Genesis cycle, you can see that we should be experiencing some sort of a top, or we experienced already a top and we are on our descent. But what's so strange regarding 2022 to 2025 is that when we are at $120,000, or when we were at $120,000, there was absolutely no euphoria from a consumer point of view. Institutions are euphoric. Even Jamie Dimon, who's been the biggest hater of Bitcoin, has suddenly started accepting crypto as a thing. We have institutional FOMO, but the actual average Joe doesn't seem to care. And that's what's weird. We're not seeing the explosive parabolic blow-off tops that we saw in prior cycles, led by major capitulations to the downside. Bitcoin has been laddering its way up all throughout this cycle. We've not seen the parabolic skyrocketing of 2020, 2021. We've not seen the parabolic skyrocketing of 2017. So does this mean that we're not going to see that bust following the boom? And here's my 2 Satoshis. I think there's many ways where you can overcomplicate things. I think there are lots of different ways you can do that. but I'm going to try my best to not complicate things for you. I'm aware we're in diminishing returns. I'm aware that we're going to see quantitative easing, quantitative tightening. I'll briefly mention some points on that, and I want to ask Benjamin Cohen when he comes on the channel on Monday also about what he thinks the effects of quantitative easing will be. I want to keep it dead simple. The most basic form of technical analysis is moving average analysis, because moving average analysis looks at trend. The father of technical analysis is trend. The trend is your friend until the very end. And I know this may be a bit repetitive from my side throughout my content, but it's really a very important message to emphasize. As long as trend is bullish, there's no need to be bearish. You can measure trend looking at higher highs and higher lows. But the thing is, the moment you would be making a lower low, it would already be like Bitcoin would already be below $74,000. And if Bitcoin is below $74,000 and then you identify, okay, maybe Bitcoin is going to a bearish trend, it's going to be a bit too late. So to try and time that better and much earlier on down the line, you need to look at moving averages. And the moving averages that I like to look at and observe are the bull and bear market support band, which is composed of the 20-week SMA, and also the 21-week EMA. This is the 54 simple moving average, which is the blue line. But if you look at the bull and bear market support band, it's just the 20-week SMA and the 21-week EMA. And looking at these moving averages, they're still pointing towards the upside. You're still in a bullish uptrend, as we call it. And the only point where I'm going to say, I'm selling is if and when, and it's going to happen, it's going to be when the bull and bear market support band and the 54 simple cross bearish. I know it's repetitive. I know I've mentioned this like 1,000 times. But in a situation where so many people on Twitter and so many people from the community are like, okay, do I sell everything? Is it over? This is the message that I need to bring to you. Until we see that bearish crossover, it doesn't make sense to shorts. It doesn't. And there are warning signs. There are, from a technical perspective, you do have a double top. You go to the monthly time frame, you do have a MACD bearish crossover, which you experienced in the tops of previous cycles, or in the midst of the cycle right before the COVID dump. These warning signs are all present. And I think those warning signs will become activated and worth bringing on these videos and showing them more actively if the trend is confirmed in a bearish direction. And you may have noticed, like I'm sort of avoiding trying to focus so much on the bearish signals and still be more optimistic, given that this is Q4 post-halving year. And you can see some miraculous things before coming to a top. And I think that's the way to go forward. But I will be bringing up more bearish signs actively on this content as soon as trend flips bearish, because trend is still bullish. I think it's okay to still remain in bullish positions, and that's what I'm personally doing in my personal portfolio, in this trading account. Like, I'm still very much bullish. I'm only telling you the things that I'm also doing myself. So I'm still very much overly exposed in Bitcoin, much less in altcoins. And there was a period where my altcoin holdings jumped, but relative to my percentage holdings of Bitcoin, but now it's sort of more Bitcoin oriented again. I'm still remaining bullish. And if you're looking for a place to be trading like we're doing so, you can check out our partners in the links in the description down below. Weeks to get a 20% deposit bonus, and Pinex to try their trading bots. When you deposit $100, you get a $100 bonus to test out the trading bots. I'm personally bullish. I'm personally allocated majorly into cryptocurrencies, and I'm still going to be in that bullish position until or unless, well, it's going to happen, but when the bull and bear market support band and the 54 simple cross bearishly, I'm going to be shifting more into stables. And as soon as I do that, I will alert you on this channel. Now, there are bearish signs, but there are also bullish signs, like gold seeing a huge breakout and now it's dumping, and a potential capital transfer into Bitcoin could be on the horizon. And then you look at M2 money supply, it's stagnating currently, but very soon you're going to be seeing quantitative easing, and that's probably going to help markets, specifically altcoins, in the better end. The thing is, when you do introduce quantitative easing, historically speaking, you introduce quantitative easing for a reason, to save the markets. It's not going to be so apparent on Bitcoin because we don't have too much history for Bitcoin. But quantitative easing is usually introduced because of a narrative that is affecting markets in a bearish way. And we know that narratives always follow price action. And actually, even though quantitative easing is great for the long run, and hopefully we will see it in the first half of 2026, even though it's great for the long run, in the short run, it doesn't eliminate a potential correction and then continuation. And to all Bitcoin holders out there, I would keep this scenario in mind. It is very much possible for Bitcoin to come down from where we are to about $70,000 once more, maybe even stretch to 69, the high of the previous cycle, and then experience a pump to greater levels. And actually, even if you were to see a correction to the 70s or 69, no matter how crazy and terrible this sounds, that is only a 34% correction. Even if you see 34% correction, we know from Bitcoin's history that happens quite often, and you would still be intact in the bull cycle, challenging it a little bit, but I think you can make the argument that you would still be within the bull cycle. And I'm saying that this drop is, it's something to keep in mind because the S&P looks a little toppy here. I don't like this weekly candle on the S&P. One of the greatest investors ever in human history, Warren Buffett and Berkshire Hathaway, have reached a whopping $382 billion of a cash pile. And most of this cash has been accumulated quite recently. They've been offloading a bunch of stock, selling almost $7 billion of stock over the past week. Now, I trust Warren Buffett. Warren Buffett doesn't switch to cash when he does. I mean, he doesn't switch to cash if he doesn't feel like something big is going to go down. So he's switching to cash. There's a lot of cash that's being put on the table, and he's liquidating a lot of his stock portfolio. Then you look at the S&P and relative to M2 money supply, and you've reached levels that you've not seen since the dot-com bubble. The S&P is overly inflated. We were expecting a definite rate cut in December, and then Powell gets hawkish during FOMC and hints that there may not be a rate cut at all going into December, but markets had already priced it in. So we're kind of in an overinflated territory. I don't believe in the AI bubble. I think AI is still very early and it's going to transcend into different things. And I think markets will be more influenced by AI, and AI companies and data center companies and chip companies. They will get bigger, bigger, and bigger. But in the short term, I think those evaluations could be overly extended, only in the short term, leading to perhaps that drop, which would influence Bitcoin to come down to the 69Ks. And then we see the continuation. And finally, from a liquidity standpoint, right, because we were just talking about liquidity, the demand for the Fed's standing repo facility surged to $20.4 billion on Friday, the highest since the facility became permanent in 2021. What does this mean? Well, the SRF allows banks to borrow cash from the Fed using government bonds as collateral, acting as a key source of liquidity support for the financial system. The rise in usage over the last few weeks shows growing stress in short-term lending markets and a tighter supply of cash across the system. This is apparent because QT has been going on for very long. We know that regional banks are struggling too. And this all could, in the short term, lead to a small crash before quantitative easing, and then we see an extension. Doesn't mean that this small crash has to happen. No, it doesn't. Hence, I'm still in bullish positions. If we see that trend flip bearish, then I think we will see it. Narrative will follow price, but over the long run, we still keep extending upwards. And the main point of the story is really to not scare you. I didn't want to scare you with this video. I just wanted to make you aware of potential risks and actually boost your motivation that in the long run, everything should be fine, at least in my opinion. And I am acting financially based off of those opinions myself. I'm very much bullish. I'm very much continuously hodling and buying. So just be careful of short-term panic and take those advantages of panic to buy in cheap. In my opinion, of course, do whatever you wish. That's totally up to you. But just from my analysis, I know that times of high stress, times of panic are great buying opportunities Warren Buffett, the greatest investor of all time, that's his motto, and he could be hoarding all of this cash to do exactly that. And I'm going to be keeping close track on when he decides to deploy that cash. With that said, guys, enjoy your Saturday night. Tomorrow we'll do a live stream covering some sort of big events that took place over the course of the week. And then on Monday nights, hopefully I'll get the chance to interview Benjamin Cohen for the second time. So with that said, take care, and I'll see you all very soon. Bye-bye.